you're going to shoot your shot, you got to move fast. Otherwise, those sovereign funds are going to move in and they're going to buy the dip. Now, what am I talking about? Well, I'm going to take you guys into the broader market chart of the S&P 500. We're going to talk a little bit about the Fed inflation drama going on right now and what the markets saw. The CPI came in hot, but most importantly, I'm going to tell you guys where that empty seat is going to be exactly on the charts. I'm going to give you guys the big picture buy signal. Where do I think we're going to go when the algorithmic market making traders are going to swoop in and get to the bottom buy price before most people even move over there and take their risk position? I'm going to break it down for you guys today. I'm excited about this show. We're going to briefly take a peek at the S&P 500 and we're going to briefly take a peek at Bitcoin. I'm going to remind you guys of what is most important there and what we're watching for and what has to happen by this Friday for our crypto portfolios to take off like a rocket ship. We're going to break it all down. This is the Stocks with Josh show. Appreciate you guys joining me. Thank you for hitting the like and saying hi. Hit the subscribe to get this type of easily interpretable, actionable content that I'm laying down on this page each and every day. Okay, so we know that the CPI came in hot and the markets didn't like it because it simply means that the Fed is going to have to remain hawkish and it's not going to get that easing money environment that stocks can do well with. A lot of American companies need cash. Their debt is out of line. Their debt is in imbalance, and so they need easy access to money to grow their business, to grow their products. And the only ones that have any money, and we've talked about it, is big tech. They stockpiled money at the right time, and that's why they were able to go higher when the majority of companies, the Russell, was falling to pieces. And so what that meant is that all 11 of the S&P 500 sectors went negative today because the market said we are not going to give you guys the benefit of the doubt. We know that money's getting expensive and you are going to have a hard time when the Fed keeps the interest rate higher. Real estate, utilities, materials, they led the decline. And the smart money was definitely sounding the alarm that it was time to rotate into commodities. What are commodities? Well, we're talking about gold and oil are two of the top commodities that people have already been buying. They've already been going back towards their highs. We've been talking about it over the last couple of days, and the fact is they're going to continue to go higher and higher from here, even though it seems as if they're ready for a pullback. The market doesn't care. There's going to be still a ton of money rolling over to commodities. But I have to give a quick commentary on natural gas. Even in this environment, even though it would fit perhaps the right profile of an investment class that smart money would be looking at right now, the fact is natural gas is down on the floor. It's like the world has lost any love for natural gas. It's just incredible to see what an underperformer it's been for the last couple years, and it's really not doing anything today. And that just tells you that when money begins to pour out of commodities, how much lower can it go? That's a big concern. Natural gas investors, and I know there's a ton of them out there because they ask me in the comment section a lot to comment on natural gas or to give a chart on it. And I'm going to tell you up front, the only thing that I typically am going to give you guys charts on are money-making opportunities. And the only thing in the natural gas space that has been a money-making opportunity is to bet on cold, K-O-L-D. Now this chart goes against natural gas. It's going up when natural gas is going down. So it's an inverse position. And if you go and look at its chart, it's looking strong. It's looking bullish. So here's my analogy for natural gas investors, people that have put all of their money or the majority of their investment in this sector for some reason. I have no idea how they got incentivized to do that, but they remind me of that woman that dates the guy on death row. There is no necessary future. They've connected themselves to a losing relationship. Now, if natural gas turns around, I'll come back out here and apologize, but I'm just amazed that in an environment where smart money is rotating over to commodities, natural gas still isn't getting any love. All right, but let's get back to what's going on with the Fed. The bottom line is that inflation is not coming down, but the Fed believes that the current rate environment that he has created is restrictive. And so there's not much of an indication that he's going to change or raise rates, even though technically that's not entirely off the table. He hasn't been discussing it. He's been a bit more dovish than that, but he's holding the line on the rates that he's already raised. And so the idea that we're going to actually get 3 rate cuts this year seems more and more unfeasible unless inflation begins to come down. Now, this inflation that we're seeing that has a slight tick up probably has some seasonality to it. We can give inflation, like the Fed, the benefit of the doubt that later in this year, we're going to see it begin to come down and get closer to his long-term goal of right now is probably going to end up being 2.6%. I'm going to take you into the chart of the S&P 500, and I'm going to make bold predictions of exactly what might happen this week, this month, and the rest of this year. It's going to be interesting. I'm going to get out on a limb and tell you what might happen based on some past performance of the S&P 500 when we've gotten into similar situations. Before I do, let me take a very quick station break for the MOOMOO investment app. Guys, right now they're giving away 7 stocks of fractional shares of the Magnificent Seven, $5 each. And any money that you just leave in there uninvested is going to earn you 5.1%. It's available in the US, Australia, and Canada. That's the US offer. I think it's got the best trading tools for people that are on the go and having to use their phone to do charting. So check it out for yourselves. All right, let's get into the S&P 500 chart. All right, guys, so here's the current up channel that we've been in ever since October of 2023. This thing created a nice V-shaped bottom and has been in a steady up channel since then. Now we are having some trouble. If we zoom in, you guys can see with your own eyes that we have gotten to the outside of the channel in what I'd refer to as the no-go zone. So this is the daily time frame, and today is a pretty ugly day. And the fact that we have officially gotten to the outside of the candle, I'm going to tell you guys right now that if we close on the outside of this channel and we close again tomorrow on the outside of this channel, then I think that we have definitely confirmed a bigger move down. Where do I think we're going to go? Well, let's take a step back and let's look at the weekly time frame. So, big picture view, I think we're absolutely going to have at minimum of a 5 to 6% pullback. The minute that we lost the 5,200 level, if we open up at the beginning of next week underneath that price point, then I could tell you that it's my opinion, I'm going to be taking positions that look for moves down in the overall market back to the support level that I've identified at around 49.60, right beneath the psychological level of 5,000. But let's take a step back and let's kind of look at how the S&P 500 has performed in the past. If we go back to the last time we had a really big run-up move like that, it was right here, okay? We had this V-shaped recovery and this long channel that got us all the way to a swing high back in 2021. That was an incredible everything you bought just 111. And then of course we know that nobody really loved 2022 because we spent a lot of time making new lower lows one after the other. Okay, so obviously, as I said to you a moment ago, we had a nice V-shaped bottom and we're in this up channel, and I don't believe that we've come to the top of it yet. I told you guys about a month ago that I believe that we will have to assess how much higher it can go once we get to 5,500. Right now, I believe that we are simply getting a much needed correction. And back here in 2021, when we were having an incredible year, right before we got to the very top. So let's just come in and we're going to examine this area because I believe that we are near the top of the S&P 500. Let's look at how it begins to behave and what the characteristics of this final peak movement of the S&P might be that we're going to be dealing with here in 2024. Right now, it's looking bearish. We're basically down here and we're wondering whether next week's candle is going to break out of our ascending channel. So we need to be careful to watch this candle going into the Friday to see if we end up getting a long tail. If we don't, then I'm going to tell you where we are at. It's the other correction zone, which means that we're closer to the top. And let me zoom in here with you guys and we'll look at that together, okay? All this was right before we got to the top of the move. So all this was a 5.6% correction, and it was followed up after we got 4 weeks of going down. It was followed up by a very strong month back all the way to the top of that channel in 2021. And then we began to get the final volatile move that pushed us to the very top of the market that at that time was around 4,800. So let's take a step back and let's go back to where we're at today. Okay, so what I'm saying is that we have to watch this candle to see if we end up getting a nice big tail on it. And by the Friday, we end up back around 52.30. If we do, then we know that the correction was just a minor misstep, and that just like that sovereign wealth fund, they've come in, they've taken their position, and we're going to be going higher at the beginning of next week, right? We're going to go back to the top of this channel, because if you guys are tracking with me, I've told you that I believe this market wants to get to 5,500. 5,500 could be the end of this move. But if we stay within the channel, then I can tell you that I think we could go as high as 5,800. All right, so let me just address something. I see other influencers talking about the mother of all recessions or a massive correction coming, and the charts don't in any way tell that story. So if you're watching them and you tend to lean towards being more bearish, I'm just telling you, you are getting ahead of yourself, because there's nothing at all bearish about this overall trend that we're in right now. We're in a rocket ship move going up. All that might happen is we might just have a slow down moment before the rocket ship fires harder and pushes us higher. And that slowdown would just be a minor correction, potentially less than 6% to the downside, and then back moving higher. Why? It's the same reason that the inflation came in a little bit hot, because the economy is not doing as bad as people fear. We don't have the bad data. But let's pump our brakes for a minute and talk about what next data might be coming out to either confirm that we're in a hot economy or to confirm that things are slowing down. And that's the fact that we're getting into the next quarter's earnings, and the first round of reporters are the banks. Now, the banks are a pretty good gauge of the health of the economy, because that's where all the transactions, the lending and the borrowing get done. And if they're not doing well, it means that the economy is not doing well. And so this Friday, those banks are going to begin to report, and it's going to tell a lot of people to potentially buy or sell. If there's a sell-off, I don't think it's going to be very long. I think it's just going to be an early round of profit taking. It's going to be a minor correction, because I think if you take a big step back and you look at the overall market, most of the market makers are going to take advantage of the algorithm dip, because the fact is that things are still moving higher. They don't want to turn around and tell their clients that they got out of Nvidia too soon. They don't want to turn around and tell their clients that they got out of Meta too soon. If Meta is going to continue to climb this quarter and the next quarter, they have to be in it. So all they're going to be looking to do is to hedge or to reduce some risk, or to look for an opportunity and a confirmation of when they should be buying. But let's take another minute here after I've got that covered, and let's take a brief moment to go back into the Bitcoin chart so I can remind you guys of what confirmation are we looking for there to see whether or not this weekend we're going to hit 80K. Because I think the charts will tell us on Friday, and I want to cover it with you guys again. Let's look at that. Okay, we're looking at the Bitcoin chart, and the fact is, same story there. This is a bullish chart. This is a flagging pattern. Flag patterns often break to the upside, but we can't just go entirely off that. We've got to zoom in and take a look at what the immediate candles are telling us. So this is more of the local story. Again, I'm looking at Bitcoin. I'm looking at the historical index. I'm looking at the weekly time frame, which means each of these candles is a week in the market. I pointed out to you guys the other day that this was a hanging man candle, which kind of looks bullish because it's got this long tail, but the fact that the price ended flat makes it a hanging man. Now we have to get confirmation of its bearishness, and the way that that would get confirmed is if this candle closes Friday, 4 p.m. UTC time. If this candle closed where it's sitting right now on Friday, then it would confirm this as a bearish move, and the immediate next step would be that we're going down. Now, look at the fact that when we first started looking at this candle, it was red, and now it turned green. It means right now the bulls and bears are fighting out. It's midweek, and here's where things are going to change. If by Friday we get back above 71,322, then it means that this is a green engulfing candle, that it's negated the hanging man theory, and it means we're off to the races on our way to 80K before the halving. And so I wanted you guys to have these exact numbers. If we do not get that confirmation, and this turns out to be an ugly red candle by Friday, then as I said, the direction is clear. Don't try to second guess the charts. We're going to end up going much lower. We're going to go back to 61K and maybe even as low as 50. Just to be clear, at the moment, I'm actually believing that we're going to have a move here to the upside, but I don't know it to be sure. My gut just tells me that that might be the likely outcome. And why would I think that? Well, the fact is that's the trend. It's been on an uptrend, and through my experience working with charts and fundamentals, there's got to be a reason for a reversal, and I don't know that we see it just yet. I think that the news that we got today with the interest rate and inflation being a bit hotter than people were expecting isn't enough data to convince the market to go down right now. But we're going to let it play out. I don't want to jump the gun. This is going to be a big week in the markets, no doubt whatsoever. And I'm going to remind you guys of some of the direction I've been giving you overall regarding how to trade this moment. I've been recommending that it's time to consider consolidating. I've also mentioned that MOOMOO investment app that'll give you 5.1% interest rate. Start getting used to just sitting some cash on the sideline and letting it earn 5% for you guys. And then when we get to that strategic dip and I come back out here and I tell you guys what the charts finally said, you should know it already, but I'm going to come back and confirm to you what they're saying. If it's a moment where there's a buying opportunity, don't miss your opportunity to make a move and sit next to the pretty lady. Don't let the sovereign fund and the Wall Street algorithm slip in there before you. I'm giving you the exact spots on the chart. If you don't understand it, I can try to answer some questions over in the Stock Squad Patreon. That's the Discord where I give trade alerts and technicals and answer questions. I'm going to leave a link for that. That's the Stock Squad, Stock Mo, Keenan Grace, Stock Up with Larry Jones, and myself. When you sign up there, you don't just get me. You get all four of us giving thoughts on the market, trade alerts, and technicals. It's a pretty good community. I enjoy being in there. Very positive group of people. If you're part of the Discord, then throw a heart in the comment section. That's all I've got for you guys today. We're watching these charts and making these moves. We're not going to miss out on the opportunity. We're going to do it together. Appreciate each and every one of you. Hit the subscribe button to be part of the Stock Josh fam. Peace and blessings. Talk to you soon.